If you've got any financial investments at all, you might have lost a bit of sleep this week. It's been calamitous for those in the stock market or exposed to things like Bitcoin. The crypto space was actually rocked by a concerted multi-billion-dollar attack on what's known as a stablecoin. Basically, it's pegged to the US dollar, which apparently netted the hedge funds behind it close to $1 billion while wiping out a lot of other investors. It was the modern-day equivalent of the George Soros-led attack on the British pound peg that made him $1 billion back in 1992. Now, as always, these things are painful, but they're salient reminders that any market can be vulnerable to the machinations of big players. And a lot of investors, though, have only experienced the bull markets delivered through the money printing of recent times. As trillions of dollars flowed out of government into private hands, almost anything you bought went up in dollar terms. And that made us all feel like investment geniuses. But when the music stops, reality sometimes hits very, very hard. And the reality is that inflation is back, interest rates are rising, governments are pledging to stop the cash printing. It's brought the investment party to a grinding halt. And while the 50% fall in Bitcoin gets all the headlines, it's much the same when it comes to popular stocks. Market darlings like Atlassian, they're down 50% too. Facebook has fallen by 37%. Netflix, it's off by around 65%. The broader indexes, things like the Dow Jones index in America, it's down nearly 5,000 points from its all-time high. All in all, it's not a pretty sight for investors. And for those seeking the perceived safety of property, well, the predictions are there that prices are set to fall too. It's like we've been hit by a perfect storm. Well, I have to say, this one was entirely of government making. The irrationally exuberant investment markets of recent years have actually been a product of an almost delusional investment environment created by government policy decisions. Again, money printing, artificially low interest rates. They've essentially given people access to free money. People, of course, have borrowed that money, and now they're highly leveraged and vulnerable to falls. And things appear to be going back to normal. The consequences of those prices are coming back to earth. And that's not to say the governments might not reverse their course again. You see, because between a recession or continued fiscal responsibility, a government seeking election will choose the latter every single time.